You talk about the fact that, for example, oil has not had the big spikes we would expect, or gold for that matter. How much of that is just cyclical? We're in sort of a quiet period right now. But how much may be structural in the sense that technology made a difference?
Oh,
for example,
I think
shale for oil, and you can even in other technologies, in metals and things like that, we don't have to consume as much as we used to.
Well, I think that the technological innovation that you're referring to is spot on to what's really changed here. And I think that we learned our lesson over the last 6 months to respect the velocity of supply now. And I think this goes to a broader point, and I think it even segues into the macro space, is that supply was always considered fixed. You know, even you go back to the Keynesian's macro models. They always got supply can't move, therefore all the interesting dynamics are in demand. But the reality is supply now can move faster than demand. And that's what's really changed here. And that velocity of supply changes the way these markets trade. When you look at oil, we learned, I think ourselves as well as the market learned, three important lessons in terms of trading commodities. And the first one is that commodities are not anticipatory assets. They can't price the future. They got to price today. And you think about a 10-year forward oil price, it is as much like oil prices 10 years from now, like a 10-year maturity on a rate curve has to do with rates 10 years from now. It's the 10-year rate out there. And similarly, when we think about oil, it's all pricing today. And the mistake is the market, as you pointed out, after October, tried to price in this OPEC production cut and created distortions over the curve. And guess what? Supply responded to it. And I think that's what everybody was caught off guard, is how quickly it could respond. And I think the second lesson, it goes to the agriculture market. Think about any good agriculture trader. They don't trade next year's crop. Why? Because they bid up soybeans relative to the corn. The farmer's going to go out and plant a lot of soybeans relative to the corn, and the story won't materialize. And if you think about what shale's done, your point about technology, it means you can't be trading oil 3 to 6 months out because the supply can respond. So that supply cycle is 3 to 6 months. And so when we put this together, it says that you can't be trading long-dated oil anymore. And I think that was another problem. People, after that OPEC announcement, went out and traded December 2017. That's 12, 13 months forward. And that had a huge impact. So I think the technological innovation is key. The sad conclusion from all of this, though, for those of us who trade the derivatives markets, is that the volatility in these markets is going to slowly disappear.